2022 is shaping up to be the toughest year in the stock market since the global financial crisis back in 2008. It's not pleasant, but there are ways you can take advantage of down markets. One of those strategies is tax loss harvesting. That's what we're talking about. Stick around. So what is tax loss harvesting? Well, put simply, it is selling an investment at a loss so you can use that loss to offset other income. In other words, for tax benefits. Now, before I show an example, there's one fundamental thing you have to understand. When we're talking about harvesting losses, this is only in the context of non-retirement accounts. I know I'm going to get some questions about this, so I'm trying to get ahead of it. But if all of your investments are inside of a retirement account, so think IRAs, 401ks, Roth IRAs, things that are in these two buckets in the center and the right, tax loss harvesting does not apply to dollars in these investments because these are tax deferred accounts, or in the case of Roths, there are no taxes. The taxes have been paid. Any dollars that come out in the future are tax free. You don't get the benefit of tax losses. When it comes to tax loss harvesting, we're only talking about non-retirement accounts, which are also known as taxable accounts or non-qualified accounts. Now let's look at a couple of examples to illustrate how tax loss harvesting works. Let's just assume this is your portfolio, and coming into 2022, you had these two individual stocks. Very different companies, obviously, and it's been two very different tales. Netflix, as I record this, is down over 50% this year, and ExxonMobil stock, of course, with oil prices, all energy prices being up in 2022, the stock is reflective of that, being up over 70%. So here you set your portfolio, these two positions, one has a big loss, one has a big gain. So if we look at your two positions, let's just say you started with a $20,000 investment in Netflix. It's down a little over 50%. So you're sitting on a $10,200, what we call unrealized loss. It's unrealized because you haven't sold it yet. And likewise, we'll say for whatever reason you started with a little bit less in ExxonMobil. That stock is up 73% as I record this. So you have just shy of an $11,000 unrealized gain. Once again, it's unrealized because you have not sold the position. Now, if I were reviewing a client's portfolio that looked like this, and I was specifically looking for tax loss opportunities, clearly the negative $10,200 with Netflix would jump out. The question is, how would this benefit the taxpayer? Basically, you can use a loss to do one of two things. The first is to offset gains on other investments, and the second is to offset other income up to a maximum of $3,000 per year. Now let me start by talking about offsetting gains. So let's just say, for example, you felt like oil prices had peaked out and were likely to be coming down, so you wanted to get out of your ExxonMobil position. Well, the issue with that obviously is you have this nearly $11,000 gain. So if you sold your Exxon stock, you are realizing that gain, and that's going to be subject to taxation. And we're not going to talk about capital gains rates, because that totally depends on your individual situation, and I want to try to keep this as simple as possible. So, for simplicity, we're just going to assume this is going to be taxable. My point is, you can eliminate almost all of that gain in this example by also selling your Netflix and capturing that loss. The difference, of course, is about $750. But this is a classic example of how you could capture a loss, harvest this loss from Netflix to offset a gain if you wanted to also sell your ExxonMobil stock or anything else in your portfolio with a gain. Now let me address the obvious question. What if you don't have any gains to offset? Will taking losses this year be for nothing? Well, the answer is no, and this is really where the whole concept of harvesting is illustrative. So if you took a $10,200 loss this year, and that's all you did in your portfolio, the way the tax code works is that you're allowed to carry that loss forward to offset future gains. So you could take the loss this year and sell your ExxonMobil stock next year, and at least part of that gain, or at least part of that loss would be out there in 2023 to offset your gains on ExxonMobil. And I say partial because the other aspect of the tax code, or the other feature, if you will, is the IRS allows you to use up to $3,000 of any loss to offset ordinary income. So let's say, for example, you're retired, you're drawing money out of an IRA, you're taking Social Security and a pension perhaps. Well, you can use up to $3,000 per year to reduce your income. And of course, that can be valuable, especially for people in the higher tax brackets. I mean, if you're in, say, the 32 or even the 35% marginal bracket, well, a $3,000 reduction in your ordinary income is certainly going to be worth at least $1,000 to you in tax savings. Now, finally, I got to mention the wash sale rule. If there's one thing that's likely to trip people up, this is it. And the best way to explain it is to give an example. Let's say you thought you were going to be clever and sell your Netflix shares and capture this loss, and then you were just going to buy the stock back the next day. If you did this, you'd be in violation of the wash sale rule, which simply says if you sell a security and take a tax loss, you cannot repurchase that security within 30 days. If you do, you will negate the loss. So with stocks being down big in 2022, this is the year to be looking for tax loss harvesting opportunities. And if this is a strategy that you have questions about or like some guidance on, please reach out to me. My contact information is in the description below if you're watching on YouTube. If you're watching on Facebook, you can click the link that'll bring you to our website and you can schedule an appointment and we can have a quick conversation. Look, as always, I just want to say thanks for watching. I hope it was helpful. If it was, give me a thumbs up. It just lets me know you liked the video, and I hope we'll see you on the next one.